Good afternoon. Welcome to the Dow Jones 16,000. That's where they got it. They got a close above it. What we have before us, MMTs, is the weekly chart. That's number one. We are extremely overbought. And what we're saying is that when you get to these levels, all the big money out there is talking about bubbles and whatnot. Even the biggest bulls that were bulls have finally turned. When you take a look at the margin debt that is out there, it's at record highs, just like it has been in the past. So margin debt, people that are on margin, people that are chasing these stocks in the Dow, they're chasing performance because they underperformed. It is not a good recipe to have all-time highs in the margin. People are heavily buying on margin, on credit. The exchanges give you margin, your broker dealers. That's number one. The other thing that we would like to talk about is the bullish bearish percent index. You are at record highs in the bullish percent index because there's a big mathematical imbalance between the two parties. Okay? This calendar year has been a wonderful move, and we're going into the end of the year. So there is the upside is very limited, is what I'm telling people. And what I am saying is that if you were involved, like we were in the beginning of the year, it's time to start selling into some of these high flyers. We have them all on stockmarketfunding.com. Now, when we take a look at, we're right up here. This is going to be the 16,000. It's a very psychological level. So that's this little trend line that I drew right there. What we would like to say clearly is that we're overbought in all of the indexes. The other thing that is troublesome is that stocks are at very, very high valuation levels. Now, we've been around for over 30 years. We know what happens when markets get this way in bull runs. And yes, the public hasn't had a very good market for 12 years. We were in a bear. And this is the final year of the breakout into the bull cycle, which is great. You want to buy them when they're on sale. You don't want to be buying up at the highs. This is the Dow Jones Industrial Average. It is extremely overbought. And what we're saying is, and the big money, what they're doing is, we deal with a lot of people, is we're running into this pattern right here, and we're going to see if we break up and we break out of there. So that's the Dow. When we take a look at the Nasdaq 100, I will show this chart. On the Nasdaq 100 back in year 2000 when we shorted it, and the reason why I want to show the history back over here, we were in an extreme bubble then. It was called the dot-com bubble. And we would go down and there's patterns and whatnot. We were here every day. We were shorting those markets back then. What I would like to say is that I am going to draw a trend line right across the top over here on the Nasdaq. This is a weekly chart. This is where they're going to have a substantial problem, meaning that the upside is very limited. So here's a neckline way up here at 4,300. Let's just draw this particular line right there across. We'll keep those over there, and let's go over to the current market cycle. Here we are right now at 34.18. We're right up here where a major breakout can happen, which is all good, believe me. But the problem that we're having on the weekly chart is we are hitting technical levels that the big money is going to be looking at, and that the big money had already made their money. And we feel that they're going to be selling a lot more stocks in the near future. So what I am saying back over here, where I drew these trend lines and I go all the way over here horizontally, we're at a major trend line back at 34.18 that the Nasdaq has not seen in 13 years. We were in a bear all those years. And remember, this is the current high level that we're at. And those trend lines are right there where major breakouts could happen above there. The problem that we have in the very short term in the Nasdaq 100 with all the big high flyers is that we're pushing up on the wall of ceiling. It's not on sale. No. Yes, it's been a great run, but we're not on sale. And what we're looking at is taking the opposite side because getting short at some point in these overbought levels, as we have always said on the website, you can get started right here with stock market funding. Go to trading, click the free trial tab. Once you do that, my friends, get started, okay, for the 5-day trial. You get to spend 5 days with our market makers live in the trading room. You get to see every entry, every exit, everything that we're doing, whether it's stocks or options. Open an account, hit open the account. Go and click on open an account. Get started here. Not only that, is that we're going to give you buying power. Read the content very carefully. Okay? Because if you have a $5,000 account, we'll still give you $50,000 intraday. You want to find out more, we'll answer all your questions in the live trading room. We have direct access platforms. It's not like the retail ones you're using. We have many routes that go directly to the floor, no middleman involved. Routing your orders is everything. Okay? Read the pattern day trading rule. If your account is below $25,000, that's a real handicap to you. You can put all this behind you. And what do I say? If you want to make 3 trades intraday in a 5-day period, your current online discount broker dealer, whoever it may be, will restrict you to cash. Those people know what I'm talking about, and we're here to take that handicap away, let you put that behind you. Listen to the videos, open the account, you can attend, and we will answer all of your questions. All the live analysis that we do, after hours earnings or regular trading during the morning, pre-market, during the day, all day long, is buying and totally selling. And we have all the live trades and commentary here. It speaks for itself. So back to the Nasdaq 100, I'm going to put the Nasdaq composite. I'm saying that we're at the wall of a major resistance level in a very overbought market. The stocks are not on sale at this point in time until we get a great pullback again. Once we get a great pullback again, then that's going to be a different history. Here is where we're at in the Nasdaq composite. And what I'm going to do here is I'm going to blow up this part of the chart, put the zoom tool in, and I'm going to go right into here. This is where I'm going to go. We can see back in the days in the Nasdaq composite what happens to people. I'm going to draw a trend line that's very clear and transparent right there. That's 3,500. And it was really a great short back up in here. And so the Nasdaq composite has had its best year in 13 years. We are approaching the Nasdaq bull run right at a major level of resistance. And I'm showing it to be very transparent. And we're at 94-95%. We're extremely overbought. The equities in the Nasdaq composite, the leaders like Google, Priceline, Amazon, Qualcomm, many stocks, LinkedIn, Tesla, they all end up in a very bad way. Because what ended up happening is that people have not performed, and it was hard to believe that the bull run could go as far as it would go. But it has. And the thing about it is time to look at taking profits or learn how to short the market when it's this overbought. And you have to be careful and you have to have experience doing that. And we're here to help you doing that. So what I am going to do is draw this current piece of the chart. We already know that the Nasdaq composite has come a very long ways since year 2000. We had 12 years of bear, and it wasn't very pleasant for the bulls during that time. The markets moved 175% off of their lows. You need to get involved in the next bull market. For the people that I'm talking to in the group that were washed out and burnt over all of those years, we can put that behind you now. And we will, like I said, do everything that we can to help you with buying power. You can get the management behind you, can get everything behind you right now. You deserve the opportunity to make money. And you deserve the opportunity to see that the S&P in itself is an uncharted territory, but unlike the other indexes is that we are very overbought. The upside is very, very limited. Particularly, it's a stock picker's market. Let it be known. So I've covered all of the indexes to let people know that the Dow was up 109 points today, 16,009. Nasdaq 100, 3402.73, up 35.57 handles. Nasdaq Composite 3969, up 47 handles, and the S&P 500 right at that golden touch, right below 1800 here at 1795, with a very overbought area. Listen, stocks are not on sale. You want to buy pullbacks. You want to get in the good names. Earnings hasn't been very good for retails. Look at the Obamacare. There's a lot of headwinds in 2014. And 2014, I can just tell you, will not be like 2013. And for those of you that have been on the sideline or the markets have burned you and you haven't come back to the market, well, it's time for you to do that. And it takes money to make money. And that's where the buying power comes in. We will put up the buying power along with the intraday management on entry, exits, and profits. So get involved in a free 5-day trial. For investors, I can just tell you right now, the Nasdaq Composite is not on sale. And yes, the bull rally's been wonderful. And it's time for the bigger money to take profits. They've done it throughout the year. We have all the evidence right there for you and all the other pullbacks. And every pullback was met with great buying opportunities. So you got to wait for the next pullback. You do not want to get caught in stocks at their high. The margin debt, the bullish bearish percent index, the biggest thing that I will show you, part of what I'll show you is very quickly, is the fear indicators, $ VIX.X, enter it. I'm going to blow this up for us right now. Here's a snapshot of a trend line. This is the fear indicator. And back in the day when the things were very complacent over here, but look what happened. Fear went up, stocks were on sale. So when I draw this piece of this chart up, we are going to show the trend line in the fear indicator, which is at historically low levels. People are very, very, very complacent. You have to go back to 2007, 2006, where we're at a very complacent level in fear, meaning that no one has any fear about the market going down at all. That's what this means. And what we're saying is that the lower that this goes, that means that the more irrational exuberance in prices relative to what their earnings are forward looking is that there's a problem. And it never ends up great. So every time that there's a correction, these things will break out higher. What we're pointing out from the indexes is that there isn't any fear. And usually that's about the time when things will change. So it's a special update on all of the indexes. Beware of one thing. If you want to get involved with your trading and you need the trading capital and you need the management, come to us right away. Get that free 5-day trial. Get the expertise behind you. We're willing to help. We think that we believe that you have the right to get back involved in the next bull run. Once again, special update, November 11/21, 2013. Just be cautious and be careful. Stocks are not on sale.